Good morning, everyone. It's Monday morning, January 23rd. It's around 7:30 a.m. Eastern Time. Just going to quickly run through the morning charts and kind of recap on what took place on Friday and what's unfolded this morning in pre-market and kind of what I'm looking for going forward in the next session or two. Here we've got the US dollar index. You can see we've been in a strong uptrend. Now this is the 4-hour chart and we go back several months here. More or less we see the US dollar pull back, fairly extended pullback here. Had a little pause here the last session, and this morning we're seeing it pull back a little bit more. Now we are into a pretty main support level here. We have broken a couple different key support trend lines, depending on how you want to draw them. Overall, we are coming into pretty much the last kind of resort for support on the US dollar index. If it breaks down, we're going to see it is oversold. If we see it pierce these lows, we'll probably see some type of sharp bounce in the US dollar index, but overall it'll be more or less a dead cat bounce and continue lower. And it'll coincide with we'll see a blow off top in the equities and commodities market. We'll see them move higher as the US dollar breaks below these levels, and then we'll see the US dollar likely bounce up, and that'll be a pullback in the commodities and the stock market. And then of course we'll see probably the US dollar continue to head lower, and we'll just see the stocks and commodities continue to kind of truck on higher in possibly this market where it just kind of continues to grind higher and higher day after day. So overall, we've got a pretty major support level here, which is a previous high from the downtrend and a pivot high from the uptrend. So this is going to act as a pretty key level. You can also see that it's hit this point here a couple times and bounced off of it. So we are down at that level right now, and we do have this key pivot low, which is just a little bit lower at the 79.50 area. If that level is broken, then I would consider the US dollar to most likely be starting a downtrend, and it'll likely bode well for stocks and commodities going forward. Now let's just take a quick look at what's been happening with the fall in the dollar, how that's affected commodities. This is a 4-hour chart of crude oil, and you can see here more or less with the US dollar falling straight down this morning, crude oil is moving straight up, pretty much candle for candle. Now overall, if we just take a look at the crude oil chart that I did last week, you can see that overall this is a 10-minute chart. It's still zoomed out a month and a half. You can see how we had kind of a rounding formation on top. We had rising volume as the price was moving up. Then we saw the market chop sideways with strong volume, so it's churning. It's as it moves up, we're seeing big money move out, and more or less that kills the upward momentum. And then we saw the first real drop with some strong selling, and then we had this kind of little bit of a bear flag come up here with more or less it had 3 surges to a high, which is something I look at quite frequently. You kind of see one, two, and it more or less a double top. It might have pierced a little higher, I'm not quite too sure. But overall, you get these 3 surges after very sharp pullbacks, which is telling me that after you have 2 sharp pullbacks and you go up into resistance like this, generally it means you're going to head lower. And we did. We ended up heading all the way down to these lows here and just broke these lows, and we took some money off the table on Friday. So jumping to the crude oil chart, if we just zoom in a little bit here, we had this rising pattern that I pointed out a couple weeks ago, and then we broke down below that level. Of course, we got that continued rally. Eventually it broke down, we got that kiss goodbye, and this was the 3 surges, 1, 2, 3, and then we saw this nice pullback. So this morning we're still in a downtrend on the short-term basis for crude oil. It is having it was oversold here on the 4-hour chart, so it is having a bounce. Could easily continue to move lower, but right now it's having a strong move up with the weakness in the dollar. So we're going to continue to keep our eye on that play. Looking at the gold chart, gold continues to kind of work its way higher. If we just look at this kind of pattern here, we're just kind of trucking our way kind of up, kind of hanging here. At any time it's going to have a lot of pivot lows here that if we see price start to fall, we could see gold pull back fairly sharply. Now if we look at the weekly chart of gold, just pull up the weekly. and just zoom in a little bit, we are coming down into a pretty key resistance trend line here, which we're pretty much tackling today. And I pointed this out about a week and a half ago. I said if it works its way all the way up here, it could be time to see gold actually pull down. So the question is it going to break above this and start a rally, or is it going to break down? Now, overall, it is pretty much trading at a resistance zone, which is simply some pivot highs, a pivot low, and a support trend or resistance trend lines. We'll see if that's going to end up continuing to go lower, but overall it's still stuck in a downtrend until we get a breakout and some type of setup. I'm not looking to go long on gold. Silver's doing pretty much the same thing. Silver had a huge pop on Friday, and it's having a little more of extended move, another 2% up today. Silver is very volatile, and it can just explode like that. Looking at this pattern, we had this kind of rising pattern here, and it looks as though we're getting a blow off top. Overall, we have broken a previous pivot low here, still have another one here, and if we just go to the weekly chart, we can just zoom in a little bit, and you can see on the longer time frame we still have very similar to gold, we're still under, quite a bit under that the more key pivot high to really break out on silver. And of course, if it continues to work its way that direction, it will come into this resistance zone and the trend line. We'll see how silver plays out. Silver doesn't really move all that smooth when you're looking for actual chart patterns. It kind of has a mind of its own and kind of moves on momentum. But overall, that's kind of where we stand on silver. Now, taking a quick look at I just want to pull up some bar charts here. Here we've got stocks, the chart of stocks trading over the 50-day moving average. Anything over about 75 I consider to be a market that's overbought. So this is an overbought territory, and it's a pretty good. It's usually about a month a month to 2 months you get a pullback when you get up to these levels, and that's where we're trading right now. We're back up to a high that we had set before, and we saw the market more or less start to top out and then have a drop. That's kind of where we are right now. We've got this kind of extended move up, very similar to what the equities market looks like, and when it starts to pull back, it'll probably be a fairly sharp pullback in the equities market. Now, dropping to a shorter time frame, which is the key one I focus on, this is the stocks trading over the 20-day moving average, and this is a shorter one. So here we've got 80% of stocks in the stock market trading over the 20-day moving average. It's been just holding under this 80 level for a little bit. Today we might see that pop above that level. The market looks like it wants to still go a little bit higher and really shake out any shorts that are left in the market. So we might see a pop, something very similar to what we saw right over here. You just see a couple days up, really shakes the market out, and then you see it just kind of tank and sell off. So hopefully we get some type of pop in the market, bring it up to the 85, 90 level, and then we'll see the market pull back fairly sharply. A sharp pullback means it still could only just pull back for 1, 2, or 3 days, but it will be a very sharp pullback percentage wise. Now, taking a look at the SP 500. This is a 10-minute chart of the SPY. More or less, we've seen just continued pauses, surge, pause, surge, pause, and it closed fairly strong on Friday, right up at the highs. And in pre-market trading, we're seeing it's pretty much going to open flat, pretty much where we are. But overall, it's still in a little bull flag pattern here, and no reason why it can't continue to go higher. It just had more or less a day and a half pause, which gives it enough juice to have another day up. So that's kind of where we stand with the equities market, and really it's really squeezing the shorts. Here you can see we're just getting overextended. We really haven't had any real pullback in the equities market. It's just continuing to kind of narrow and get tighter and tighter and higher, and eventually we're going to have a lot of pivot lows. We're going to have a pivot low, and pivot lows are where people place their stops, and when they place their stops there, they turn into market orders and they execute at the next any price they can get out of the position. So here we've got these pivot lows. This gap window will actually act as a pivot low also. So once we start to see price drop and it starts triggering below the pivot lows, below support trend line, and it'll just pick up volume, and we could see a 1 or 2 day or 3 day drop that could pull us all the way back down into the 26 25 area. There's a good chance that we'll see a very sharp drop like that. So we got to be cautious. Any new long positions will need to be very small. The trend is up and it continues to hold firmly, but we are getting into this point where the sentiment and everything seems to be across the market becoming just overbought, and it's at a point where we're going to see a very sharp pullback at any time. Looking at the futures chart this morning of the SP 500, you can see this is Friday's session here. It traded just sideways chop, had a run up into the close. Last night and this morning we saw a little gap down in the S&P. It's traded sideways but held support more or less. And just in the last few hours we've seen, this is a 10-minute chart, so just in the last hour and a half, 2 hours, we've seen a little pop up and pull back, but we're pretty much trading right at where the market closed on Friday. Now, one other chart I just want to pull up real quick is just the VIX. The VIX, you can see I've zoomed out here several, pretty much 2 years, and you can see you have the big high volatility times when the market pulls back, and then you see the market extend and rally, and the VIX just continues to drop. Now, we haven't seen it drag out quite as long as this yet, and I think it's very possible that we see the equities market continue with another maybe 8 to 12 months of heading higher and higher. But overall, on the short-term basis, we are way down in an oversold area, and everything is lining up, in my opinion, that we're going to get a nice sharp pullback in the equities market. Just a blip, I think it'll be, and then more or less we could see it continue to head higher, the equities market, that is. So, of course, if that happens, we're going to see the VIX jump in value. Just looking back down here, we are pretty much right at a key support level. If we just drag a trend line across here, we're pretty much, the VIX either trades below it or above it, and that's kind of right where we are now. The lower the VIX goes, the higher probability we have of a sharp pullback in the market. So that's kind of where we're standing. Overall, there aren't really any good VIX ETFs. Generally, the VIX here is at a price where if you could just buy a VIX ETF, you could hold on to it. Eventually, you're going to get a nice spike in the VIX, and you'll make some pretty good money. Problem is, the VIX ETFs, if the VIX just continues to go sideways or work its way a little bit lower, the VIX ETFs actually just lose value like there's no tomorrow. They just continue to drop in value, and then when you finally do get that volatility spike, the VIX ETF, you'll be lucky if it gets back to break even. Meanwhile, the VIX will be trading somewhere sharply higher. So you got to be very cautious with the VIX ETFs. I'm not a fan of them unless I haven't found a good one yet. I haven't seen any. So if you do find a good VIX ETF, then pass it on my way. But if you got to make sure you compare them with the VIX, because you'll notice the ETFs just drop right off in value. You can't just hold one and see the VIX go sideways without the ETFs just losing value like way too much on a percentage basis per day. Anyways, that's it for this morning, and I'll talk to you in a little bit. Bye bye.